Very good. Those who don't come have come today. Okay. What are we doing now? So, any doubts? What was the takeaway last week? I forgot totally. What was the takeaway? தம்பி ஏன்ப்பா அங்க போய் உட்காந்துருக்கேன் ஆ குளிருதா பரவாயில்ல Yes. What are the takeaways? என்ன fair value measurement completed everything. And there was some written assignment also. I asked you to write out, answer some questions. No. Sure. Okay. But there were few things which I have not covered. Okay. Take your SBR book first. Okay. So I think the first three chapters. What are the first three chapters? Performance reporting. Okay. Fourth chapter. Revenue. So in your study hub, revenue comes under performance reporting. Okay. So which I think we did not cover last week, which you are going to cover now. Otherwise, I think we have covered. Whatever we have not covered, that means you have to cover it. Okay. So see that you are going through it. Okay. So basically, these 4 sections. Okay. You don't have to compare your book and this. There will always be difference. Go with the book only. Okay. What you can use is you can use this for the practice and all these things. You can use this. Okay. So, but you have to parallelly keep using it. It does not like towards the end I will do. Okay. Fine. So let us go to the next important topic within this, which is your IFRS 15. Okay. Revenue recognition. Now what I want you to do is now take up your FR book. Okay. Go to the revenue chapter. SBR you can keep aside. வேமா இங்க வேமா இவ்வளவு சேர் இருக்கு காலியா இருக்கல இடம் யூஸ் இட் revenue. Okay. Quickly glance through. It is your book. You have studied already. You have passed the exam already. Quickly glance through. So in your SBR book also, you will see the same thing. Okay, ditto. There is no change. Barring they might have changed the name of the examples, or maybe some additional sections are added, small sections. Minus this your uh, construction contracts, right? So that is not there. Why? Because it has now become very easier. Because what as far as construction contract is concerned, whatever cost you have incurred, you have to recognize, and revenue will be measured over progress. Okay, basis the progress. So it has become very simpler. So for that reason, they have reduced that scope. Okay. So now what I want you to do is, you have seen, right? Now take your laptop. Okay. You will summarize according to you what is IFRS 15 quickly. 10 to 15 minutes. Quick points. You can refer your book also. Okay. And summarize in a word. Okay. Like if you have to write a note on IFRS 15, right? What are the points that you will write about? Okay. So you can refer your book. Take your book. Be writing, because I can show you SBR book is also with you only. Ditto same. There is nothing, no change. In fact, examples are also same only. The scope is changing in terms of how you are able to explain it. All the points relating to IFRS 15, you have to write. Look at your book also. Summarize. Write down the main points. let us. So, what have you written so far? Okay, it's good. We can again continue. Let us discuss what you have written so far first. Okay. Yes. Read properly. Not think that I know it. Think that I do not know it. Now tell. You will get 1,000 rupees if you do it properly. Now tell. காசு கொடுத்தாதான் பண்ணுவானுங்க நம்ம நாட்டுல இல்லைன்னா பண்ண மாட்டாங்க
Under the transaction price, there are two substitutions. One is variable consideration, such as performance bonuses where performance is satisfied. The other is financing. When there is significant time difference between purchase of the goods and receiving cash, and the difference between the sale price and the cash received is the financing. Of performance obligation, recognize revenue as a performance obligation satisfied. That an entity repurchase agreement. The entity has opted to repurchase the goods. The repurchase is less than the original price is termed as fees. Repurchase is more than the original price was at a financing agreement. This is all announcement. Control of the good has been sold to the customer, but it's not transferred to the customer.
IFRS possible documentation that I changes to open identify the separate contract. Sometimes the contract may consist of more than one obligation, so the it's necessary to receivable completion the cash consideration, the consideration payable to customer, and the existence of a significant financing component, and without that opportunity price to price performance and
Okay. Yes, ma'am.
Identifying contract, identifying performance obligations, identifying transaction price, allocation transfer price to obligations, agreements. When performance obligations is completed for a contract to be identified, it needs to be approved by the parties. Then you have right to quality consideration. For the performance obligation, there can be more than one performance obligations. So the transfer pricing based on two variable consideration and pricing. Then transfer price to be allocated should be based on standalone selling price.
Okay. Yes, ma'am. Indumati.
Payment term of the transaction price. It is based on variable considerations, significant parameters. Will be
What is over a period of time and what is at a point in time?
At the point in time, where the whole obligation will be done.
So what you guys have done is, this is an outline. Okay, without going in depth, you will have to go in depth. Okay, so now this is your, when I did your IFRS 15 in your FR. Okay. Remember these examples? Tata Sky, then software, laptop, make my trip. This is the example here. Make my trip, or say Flipkart. I'm ordering from. So principal and agent will come into the picture here. Principal and agent will come into the picture here. Okay. This. So 100 crores received today by selling the flats. Okay, but this is only a proposal, but money has been received. Nothing has been started. So when to recognize revenue? So for that, the answer is in your IFRS 15. So IFRS 15 mainly deals with how much revenue to recognize, when to recognize. These are two things: how much and when. Okay. So the same examples. Okay, with the same examples, we can complete entire IFRS 15. Okay, what is the Flipkart example? Discount. Principal and agent. Yeah, principal means what? I am selling mobile phones by myself. Then I am principal. Even though I'm not a manufacturer, I'm a trader. But the responsibility of this mobile is on me. Tomorrow, if anything goes wrong, you will give it to me. I will get it from the manufacturer. But if I'm Flipkart, Flipkart will not take this. Who will take this? The seller will take this. So Flipkart will get only commission. So Flipkart should recognize only the commission, not entire price. Okay, whatever commission Flipkart gets from the supplier, right? He will recognize that much of revenue, and entire product's revenue will be recognized by the seller who is there on the platform of Flipkart. Okay. Now, as far as your SBR is concerned, okay, the question will be around how this transaction should be treated. Okay, so these are some of the starting points how you can recognize. So what does revenue recognition say IFRS 15? That when to recognize, how to recognize, right? And the answer is very, very clear: when the control is transferred. Okay, when the control is transferred, at that time I will recognize the revenue. Okay, so that means revenue should be recognized when S transfers the control of the product to B. Okay, who is S? Seller. B is buyer. Okay, then the another point, these three are the ones which you should address. Okay, when you are writing the answer, whether it is a single performance obligation or whether it is a multiple performance obligation. Okay, selling laptop along with service for 1 year. selling a car along with service for 1 year, then there are multiple performance obligations. Okay, if you are only selling the laptop, you are not talking anything about the service, then that is separate. But if service is integrated, then that is multiple performance obligation. So what does this mean, single or multiple performance obligation? This have to be accounted for separately as revenue. Right? Car is there. So this example I think you would have come across before also. Car is there, tires are sold separately. But when I'm selling car, I cannot say you can buy the car, buy the tires separately. I will not give tires. Right? I cannot say. Very simple. Can the asset be used as it is? Okay. So even though tires are a separate product, but can a car be used without tires? No. Right? That means this is single performance obligation. You are selling the car along with the tires. Right? Even though you are selling tires also separately, you will not account for tires separately in this transaction. Here it is car is sold. It is a single performance obligation. What is the objective? The objective is to show how much revenue from which product. Here you will not show sale of tires separately. Even though you are selling tires, if the customer is asking, give me 2 more tires extra. Okay, I will need it. Then you will bill that separately. Okay, accordingly revenue. That means only when you deliver, you cannot say iniki tire at car 3 months ka. You cannot say I have delivered. There is not a multiple performance obligation. You cannot say, okay, I have given the cars, I have given the tire, let me recognize the revenue for tire. No. Okay, if it is a multiple performance obligation, for example, I have delivered the car, but customer wanted some specialized car seats, seat covers. Already cover is given. Customer wanted some specialized seat covers, which will cost another 50,000 rupees. Right? So that will happen after 1 month. In that case, that 50,000 I can recognize later. For now, I can recognize the cost revenue of the car. Getting my point? Customer wanted different tires, not these tires. Hence, delivery of the car is pending. You cannot say car is ready. Customer has not taken it. Have you transferred the control? No. So that is the meaning of single or multiple performance obligation. Another example of single or multiple performance obligation is construction of building. Construction of building. So in your SBR, you can go through this. That building example, I think I would have given here. So construction, okay, let's say I am giving a contract to the contractor, a building construction company. I'm telling, okay, this is the space, I want you to construct the building. Okay, what will be the type of the building? So that is the agreement. Now in this building, what will happen? A lot of things are there, right? Basic structure, the structure, that is the box. Then that means you have all type of what you have, the bricks, you have cementing work, all of that. Then you have plumbing line. Then you have electrical line running, right? Then you have painting work. All of this is part of the building, right? You cannot simply construct the box, and you cannot say plumbing line you get it done from someone else, electrical line you can get it done from someone else. No. So that means this becomes a single performance obligation. Okay. So what is the meaning of this? Very simple. Does the entity, that means the one who is providing the service, has an alternative use of the asset that is created? Box is created. Can I use the box? Can the customer use the box? No. Plumbing line, everything else has to be done. These 3-4 main things have to be done. Plumbing line, drainage line, electricity line. Maybe elevator is not installed. That is okay. But if it is a 10-story building, elevator becomes mandatory. Government says mandatory. More than 2 floors, elevator is mandatory. Right? Now, elevator or the lift may be part of it, may not be part of it. right? That is okay. I can get the lift to be installed by someone else, which is okay. And then that becomes multiple performance obligation. But these 3-4 things, plumbing, electrical line, painting work, these are single performance obligation. That means only when this is completed, you can recognize the revenue. Understood the meaning of single and multiple performance obligation, right? Selling laptop along with laptop or any electronic item or any product, selling the product individually and selling the after sales service also. If you are having an after sales service is a separate product, right? Then it is a separate product, separate obligation, right? But you are not doing service for anyone else. You are doing service only for the products which you have sold, right? And then that service you are giving as an option to people. If you want, you can take this. Okay, accordingly, price will increase. If you do not want, you just take the product, keep the service separately. Accordingly, price will come down, right? So that is the meaning of single or. That means this will determine whether the obligation is completed or not, whether the contract is completed or not, right? So in every scenario, we have to look at it whether it is a single or multiple performance obligation. Because what will happen in a contract, some portion may remain incomplete, some portion may remain complete, right? If it is a single, then you cannot recognize the revenue. But if it is a multiple performance obligation, this is complete to this extent, you recognize the revenue. Able to understand? So when will the control get transferred? When the performance obligation is completed. Okay, write down when will the control get transferred? When the performance obligation is getting completed, depending upon whether it is a single or multiple. And so when do I say that the performance obligation is completed? When the service is at a time or service is over a time. For that, you have to understand whether the service is at a time or service is over a time. Service is at a time means product sold, over, finished. Okay, but service could be over a time also, right? So for that, the guidance is there. So these 3 points are interconnected, right? So it is not that all these 3 points you have to reproduce in the exam. Depending upon the scenario, you can take one or more of these points. Okay, so if it is a sale of a goods, right, then third point is very simple. At a time, you have provided the service today. That is mainly for service, actually not for goods. Goods will get over here. When the control is transferred, okay, good. This is mainly for service. Okay, mainly for service or a longer duration contract. Able to understand this? Now, within this, what happens? Obviously, all these things are there, but performance obligation at a time or over a time. Performance obligation, this is actually little confusing. Okay, your material is having these points. Your FR book is also having, the focus was not there on this. Probably in SBR, there is a little bit focus on this. Okay, what is performance obligation over a time? So very simple, your construction contracts, you are building the softwares. Okay, anything which takes a reasonable amount of time to complete. Okay, so what do we mean by overtime? So what is the difference now? Why are we talking about overtime and at a time? If it is overtime means revenue will be recognized over a time. If it is at a time means revenue will recognize at that point only. Okay, so your Tata Sky, your Tata Play, right? Your any type of monthly services, rental is over a time, right? Okay, so what do we mean by performance obligation over time? One of 3 conditions if is met, then it will assumed that this is over time. Okay, what are the three conditions? One of the three conditions, simultaneously receiving and consuming the benefits. Receiving and consuming. Okay, these are the points which you have to reproduce. Then only that means it is apparent that you have understood, okay, the standard. Okay, the performance obligation is assumed to be done over a time if the customer is simultaneously receiving and consuming the benefits as the seller is performing the contract. So this is your Tata Sky and all these things. Okay, any type of monthly services, any type of monthly monthly consulting services, any type of these services, simultaneously you are receiving and consuming. It is not only just receiving, consuming also. Okay, so then in that case, the seller can recognize the revenue over the period. Okay. Tell me, what is the why are we discussing so much about this revenue recognition? What is the reason? What is the reason why are we discussing so much about? This is the most important component in the entire financial statements. Revenue, right? And so much of judgment is involved. Getting it, so much of judgment is involved. So in the entire financial statements, their entire profit is driven by revenue, right? So we can play around it. So that is why as much as guidance is provided. Okay. Performance creates or enhances an asset that the customer controls as the asset is created or enhanced. Means I am trying to manufacture a product asset. Here they are talking about asset. Okay, in the previous case it was not asset specifically. It can be a goods or service. Performance creates an asset which the customer is controlling. What could be the example of this? Controls as the asset is created or enhanced. Performance is creating or enhancing an asset that the customer controls as the asset is created or enhanced. Could be any plant and machinery, okay, which is done in different stages, right? You could be an engineer, okay, you could be a mechanic, okay, a specialized mechanic or a technician who is producing the asset, okay, in different stages, and in those stages the customer is able to use the asset. Controls, customer controls. That means here very simple, you are creating something which the customer is able to, on which the customer is having simultaneous control. So that means this also is resulting in performance obligation over a time. Software updates, but customer is not controlling the software. That will come in first one. That will come in first one. Basically, control. You should have the control. In that case, control is with the company, not with the customer. Okay. Then third point is again, the first two is okay to identify, easy to identify that the performance is happening over a time. The main difference comes in the third point, where from the seller perspective, if I am creating a specialized asset, you have given me an order and I'm creating a specialized asset. Okay, that means this specialized asset will not have an alternative use. I cannot sell it to someone else. Right? I cannot sell it to someone else. Okay, in which case, this is, even though it is taking 1 year, even though it is taking 2 years, it is a specialized asset. Right? In which case, can I recognize the revenue before it is completed? As simple as that. That is the meaning of 3 and 3B. So if you are creating a specialized asset, then the performance obligation is at a time, that means only when it is completed. Okay, so the book definition is little confusing. Okay, they are telling the opposite. They are telling performance is not resulting in an asset with an alternative use. That means, or to put it other way, I am creating something which is generic in nature. If you are not going to buy it, I can sell it to someone else. In which case, I can say performance obligation is over a period. But if I cannot sell it, that means it is a specialized asset. That means this asset is not having an alternative use. In which case, I cannot recognize the revenue. That means at a time, only when it is complete. Now, what I will want you to do is go through your SBR book, the illustrations that are given, the test your understandings. Try to answer those. Without referring to the answer, write the answer for that.
What happened?
Yes, what is the first question about? More or less same only. Whatever is there in an FR is same only in SBR. Huh? Because you have all passed the exam, so I thought you will be able to answer easily. Huh? What is the first question about?
That is provided.
Read it. Huh?
Crystal providing service for next.
Where is your book? Where are you reading from? When the PDF file?
The purchase is 12 million. Business entitled to an extra 3 million if after 12 months the number of mistakes made falls below a certain threshold required. That Business has experience of providing technical services in the past and is highly probable that the number of mistakes made will fall below the acceptable threshold. Business has no experience of providing service and is unsure if the number of mistakes made will fall below the threshold.
Variable consideration. Okay. So all the variable considerations marks. So what are they asking?
Discuss the upcoming payment of Lambo investors financial statements for the year ended.
Bristol, Bearstore. Fill it out.
BRISPO.
BRI? BRI, yeah. In my book I saw it is Bear, BAIR. Bear change pannitaanga. You have seen in the SBR book only? Okay, then better. You're looking at the SBR. Okay, fine. So now, how will you draft the answer? We know the answer technically. How do we explain it? That is the challenge. So again, that is how directly do not jump to the answer. Very simple. You have to use this. Okay, this contract. Okay, what is the contract? Contract to what service? They have mentioned. They have not mentioned. The service discussed, the contract service that is discussed, okay, appears to be a single performance obligation, right? So the moment it comes single, only when the control is transferred, okay, you can recognize the revenue, okay, but the control is transferred at a time or over a time? Over a time. Why are we telling over a time? After 12 months? No. No. You have to give these answers. Are they talking about any specialized asset? No, right? So have they mentioned that point? Are they talking about any asset or anything? No, right? Okay, so one of these points, so performance is not resulting in an asset with an alternative use also we can mention. So one of these points have to mention. Understand that you will get 5 marks for this minimum. Okay, then at least you have to write a little. Then you can talk about variable consideration. So the moment variable consideration comes, probability will come in. That is where judgment also comes in. Right? That is also a judgment case only. Okay. So, so you will draft the answer like this, and then you will come to basically what there are two allocation of transaction price will also come. How much is there? 12 million plus 3 million. Total transaction price is 15 million. However, it includes variable consideration of which the service provider is not sure of achieving the variable consideration. Correct? That is what the question is telling. Okay. Then at least 7 marks there. Okay. So because the service provider is not sure, you will not recognize the variable consideration. Okay. So how much you have to recognize? 12 million. Okay. Check the dates first. What are they asking? Accounting treatment for which year? So for that year, how much you have to recognize? Only 1 month you will recognize. That means how much? 1 million only. Yes, for this you will get 2 marks at least or 3 marks at least, because this is the answer ultimately. Right? So dates become very, very important. In over excitement, you will mention 12 million to be recognized. 12 million is not to be recognized. Right? You have to give that calculation also, 12 into 1 by 12 or whatever it is for this period. And if they are not giving you the dates at all, okay, explain the accounting treatment for the above transaction. Then what you should do? Each month for that time, how much you have to show, and for the subsequent accounting period, how much revenue to be recognized, like that. Okay, so this part is also because when and how much, 2 questions as far as SBR, as far as your revenue recognition is concerned. What are the 2 questions? When to recognize the revenue and how much to recognize the revenue. This is the key. So whether condition is met or condition is not met, accordingly you can do this. And the PDF is updated. Which year? 20. Okay. Send it to me. I want to look into it. That's all. Any other requirement is there in the question? No, right? That's true. Okay. So that is about your variable consideration. Now go check the answer. See what they have written. See what they have written. First, how much they have written? Answer. Scenario A and scenario B. You see? Read the answer. Hey, look at this, man. Then you can do it. Send it. Okay. Read, ma.
$12 million consideration is fixed. $3 million consideration that is dependent on the number of fixed made this variable. We shall now estimate the variable consideration. It could use an expected value or a most likely amount. Since there are only 2 outcomes, $0 or $3 million, then a most likely amount would better predict the entitled consideration. A. Bristow expects to hit the target using a most likely amount. The variable consideration would be valued at $3 million. Bristow now then decide whether to include the estimate of variable consideration in the transaction price. Based on past experience, it seems highly probable that a significant reversal in revenue recognized would not occur. This means that the transaction price is $15 million. As a service, it is likely that the performance obligation would be satisfied over time. The revenue recognized in the year ended 31st December 2011 would therefore be $1.25 million. Should be depending on the.
Okay, so now this is the answer for one scenario they have given, right? Whether the condition is met and the mistakes are lesser than that. Now look at the flow of the answer. They have given very point specific. Okay, that means they have explained whatever you will do in the calculation, you are explaining. Okay, they have not opened the answer. I told open the answer also. Okay, that means as per IFRS 15, this is a single performance obligation over a time. Open. Here, yes, here the focus is on variable consideration. So that also we have to see as to which aspect of the standard is being focused. Because you have so many things: financing component, non-cash consideration, variable consideration, repurchase agreements, allocation, discounts, right, over a time or at a time. You have to identify what is focused over here. So keeping that in mind, how do I explain? So variable consideration means probability will come, right? Because variable consideration will depend on some outcome, right? So then that point has to be brought in. Clear? Are we getting it? Okay. Now, what is the next question? Test your understanding 2 or second question. What is that? Read now.
Norton enters into 50 contracts with us. Each contract includes the sale of one product of $1,000. The cost of Norton of each product is $400. Cash is received upfront and control of the product transfers on delivery. Customers can return the product within 30 days to receive a full refund. Norton can sell the returned products at a profit. Norton has significant experience in estimating returns for this product. It estimates that 48 products will not be returned. But how should the above transaction be accounted for?
So what is focus over here? Which aspect of the standard is in focus here? The first thing is clear. You have to answer for 2 questions. When and how much? Right? Okay. Then what is the focus? First, identify the contract. What is the contract? Okay. Now, to identify the contract also, there are few points which they have given guidance. What is the guidance? Okay. The contract should be not necessarily, it has to be a formal contract. It can be an oral contract also. Okay. What is important? That parties have agreed. Both of them have agreed to do whatever is expected out of them. One will provide, the other one will receive. One will supply, the other one will buy. Right? One will provide the service, the other one will consume the service. Parties have agreed to do something. That contract is identifying the payment terms. Right? That means if in a contract payment terms are not mentioned, it is not a contract. Right? Whether when to pay, now, later, how much, what conditions, payment terms. Right? Commercial substance. It means it should be commercial nature. We are not talking about NGO. We are not talking about charity. There has to be commercial substance and probability that payment will be received. Right? Now, all these points will not always be focused in every scenario. Right? If there is a scenario which talks about a doubt about payment, then you cannot recognize the revenue at all. If there is a doubt in the beginning itself, at the time of identifying the contract itself, that payment may not be received, you cannot recognize the revenue. So here what they are telling, it is sale or return of goods, right? This is what is the focus here? Sale or return of goods, right? So what they are telling, you have 1 month time. 30 days. In 30 days, you can return any time. Right? Thereafter? That means within 30 days, you can return. After that? After that, you can't return. So that means you have 30 days time to return. So sale or return, this is sale or return. Up to 30 days you cannot. I mean, you have time of 30 days to return. Thereafter, you cannot return. Okay. So now the question is, when the revenue should be recognized? When the control is transferred. Okay. That is first thing. When is control set to be transferred? And these are the 5 indicators that control is set to be transferred. All 5 have to be met. Your first 5 steps is different. Identify the contract, allocation of transaction price, that is different. When the control is transferred for performance obligation at a time, this is performance obligation over time. This is what you are selling the products, right? So that means performance obligation at a time. Okay. Now when control is transferred, you have a present right to payment. Do you have a present right to payment? Today, I am telling you, take this, you have 30 days time, you can return. Beyond 30 days, you cannot return. So do I have a right to payment today? Cash is means you will recognize the revenue. You have a present right to payment. There is no present right to payment. Why? Because you have given 30 days time. Is the legal title transferred? You can say yes. Legal title is transferred. The physical possession transferred. Physical possession transferred. Risk and rewards transferred. Transferred. Has the customer accepted the asset? No. Because 30 days time. There is so 2 conditions are not satisfied. No, don't. These points are there in your book. All these points are there in your book. What is more important is you have to correlate to the scenario that is given. The thing is, in books it is scattered. I have tried to put together. So how will you answer the question? What is the page number? Question page number? Abhishek, sleeping or working? What is the information they are giving? The cost in order of each product is 400 and you are selling for 1000. Why are they giving this information? Why are they giving this information? It is talking about the contract. It is commercial substance. It's a profit. Of the product transferred. So, is there a right to payment? There is no present, even though the cash has been received, there is no present right to payment. Why? Because the customers can return the product for up to 30 days and receive a full refund. So, whatever cash you have received, you should account it as what? Cash you have received, what will you account? Liability. Okay, so that point is mentioned liability only, but no, because you are doing ACCA and because you are doing professional level, you have to use a little glamorous word. What is the glamorous word? Contract liability. Page number 77. Contract asset, contract liability. This amount should be recognized as only then you will get 1 or 2 marks. Whatever mark is there for that, only then you will get. If you simply say money received in advance accrued income means you will not get full marks. Okay. Shown as contract liability. So what they are telling? So again, there is a present right to payment, no. But what they are telling, control is transferred. Control of the and control of the product transfers on delivery, right? That means physical possession is transferred. Risk and rewards are significant. Risk and rewards are transferred. However, the customer has the right to return the goods. So we can say full control is still not transferred. Okay. Accordingly, this cannot be accounted for as a sale. Products will not be returned. Okay. Now, what they are telling a significant experience. So again, this is also an estimate only. What should be done now? Should we recognize or should we not recognize? You can recognize for 48 products. Right? Because they have the significant experience in estimating returns for this product. Again, this is a so this point they have told in the question. So for two, you will recognize what this liability, and others you can recognize the revenue. Can we do test your understanding 6? Read. Shred. You have seen this question before? Then what should we do? What is the answer? Which step? Allocation of transaction price. This for the machine? 82. And balance is for this. On what basis? Hmm. 20,000. Okay. How will you allocate it? Tell me the calculation. Hmm. Correct, Amma? Correct. What is the correct answer? Not yet done. Markup you have to include 50%. So that will become 30,000. 95 plus 30. That becomes 125. Right? So you are giving 20% discount roughly. Because what is costing 125 is being sold for 1 lakh. That means 20% discount has been given from the list price. List price. List price. So your list price is 125. On that, you are giving 20% discount, 1 lakh. So on 95, 20% discount. On 30, 20% discount. So which is how much? 19 and 6. Okay, this is the answer from numbers perspective. You have to explain this. Write the answer. Understood the calculation? This is basically bundling. Okay, where is that? Should be allocated to each performance obligation separately. There are multiple performance obligations here. What is the one is you are selling the machine, and the other one is technical support. Right? You're selling machine and technical, so that means price has to be allocated. Discount, if any, should be prorated. Basis could be to identify the price when the goods are sold separately. That means when the machine is sold separately, what is the price? 95. When the service is sold separately, what is the price? 30,000. That 20,000 plus 50% markup. Right? So total you are selling for 125. But how much you have sold it for? That means you are given 20% discount. So this 20% discount has to be applied on machine separately and on this also separately. Okay. Now the focus is how do I word this? That is more important. Okay. So when there is a bundling of service, right? Bundling of service, mention this. When there is a bundling of service of multiple performance obligations. There is a bundling of service of multiple performance obligation. Okay. Each service should be identified separately revenue should be allocated accordingly. The basis to allocate the transaction price for these service individually or goods. Okay, so when service means you can use service or goods depending upon the scenario. The basis to allocate the transaction price for these services individually. So what is underlying here? The basis. That means what basis we are talking about. The basis for identifying the service, identifying the price for each of the service separately could be, okay, the observable price. Such good or service is sold separately. So the observable price underlined. Okay, here little bit of memorization is required. Keywords. Variable consideration means probability. Okay, bundling of service, bundling is keyword. Observable price is keyword. You have to underline observable price. That means if you use these words, you will definitely get marks. These are technical words. Okay, so can you read it? Whatever you have written.
And then public or private communication, these obligations should be identified. The basis to allocate the transaction price will be observed price when such goods are sold.
Okay, so accordingly in this scenario, now can you frame the answer? Can you frame the answer? Check, you are there. Be like say 10 scenarios overall this entire chapter. For each of the scenario, you should be able to write one answer. Right? Just knowing these notes will not work. Knowing these definitions will not work. The given scenario, how do I frame the answer? So what there are hardly 10 or 12 scenarios. So that will take what roughly 2 days for you. Right? Draft the answer for each of this, refer the material, refine the points. That's what. Then whenever certain questions come, accordingly you can refer the answer and you can write the answer. So when you do this 2-3 times, your preparation is over. I saw study hub, like you have very good number of questions. Actually more than what you have in the material. I don't think material questions are there. Are those questions there in the study hub? Material questions? Okay, your exam kit questions. And this exam kit they have taken from study hub. Don't say exam kit questions are there. Study hub questions are there in the exam kit. You know, Kaplan car at the point in there.
for this topic. Ask him after the exam.
Okay, whatever it is, why do we want to fight over whom to give the credit? Okay, as long as we pass with good marks, that is more than sufficient. This okay. This I missed to mention this point. The sale or return of goods. Right? Generally, many businesses you will see they will say you can exchange up to 7 days. Right? Your Flipkart and Amazon and all what they say 7 days, 8 days, and even other businesses also they will say okay you can see up to 30 days then you can bring. So that means it doesn't mean that they will not recognize the revenue. They will recognize the revenue, but based on the past experience, how many people are returning, right? In that case, they will, so to that extent, they will not recognize based on the judgment, right? So this point is also important, like correlating to real world scenarios is also important. This apparel business, Mintra, okay, they and all should never recognize revenue, right? Because our people will order 10 pairs and return 9 pairs. Yes, complete. Apparently, my mother is more happy when she sees Flipkart fellow than me. That fellow comes daily, once in 2 days he comes. Right? Bringing, ordering something or other every week. This offer, that offer. She used to call me once a day. ಇದು ಕೊಂಡು ಬಂದಿರಪ್ಪ ಅಂತ. No, she never calls. It's not at all dependent. No. Yes, completed answer. Shed. I have already completed 50%. Only 50% is left. Calculation. That is important. See, understand and how ACCA is treating you at this level. Tomorrow when you go, you're going to give instruction to your people. This is how it has to be accounted for. That is what you're doing. You're writing a mail to your people. The calculations also you have to show clearly. You cannot assume that WFL will know everything. So to prepare effectively for your professional level, you need to do 300 rupees investment. what we have to do is, whenever you want to talk to people at home, write it down. What will happen? Your writing skills will improve. So have this. This is what this used to be context rate in our times. Right and so once the task is over. If you want to, yes, I can. Writing habit, very, very important. Completed? No, complete not yet. Huh? No, completed. Read it. Right from the beginning, read it. Yes, whatever points I told, start from there. Where is your book? Read it from book. Notebook. No, that is not right. Why did you write in book? Shortcuts. Spending time here and making you write fully. Understand? This is important. Read it.
But one year model performs ability is the identity revenue to be again. Based on to allocate the transaction price, you need to be observable price and that's to support the trend. But in this scenario, when we see the standard price of machinery is 90,030 and $30 for the technical.
How did you arrive at that? That breakup you have
Technical support. When someone come in,
so here what you have to do is you have to give the context here. Depending upon now, let's say if it is for 3 marks means you don't have to explain so much. If it is for 7 marks, 8 marks. In case you have to say, so once I've given the points like bundling of the results, so you have to mention that in this scenario there are 2 products. One is the machine and the technical support. Okay, generally technical machine is sold for 95,000, that is which is the observable price, and technical support is sold for so much, 20,000 plus 10%. Like this, you have to basically you have to give a context and open up, especially where we are talking about 7 marks, 8 marks. Right? Anything less than 5, you can directly jump to the answer. Accordingly, you have to see how you can manage time also.
when the product is sold as a company, it is priced at ₹1,000. The discount given is 100,000 into the 120,000. It's transferred into 20%. This 20% discount is being applied to the cost of the product is sold individually. The discount given for the machinery would be for the calculation of 19,000 and 6,000 for the technical.
Yes. Accordingly, revenue should be recognized for the machine at so much and for the technical support at so much. That's all. That's all. So the revenue for machine should be recognized at this point in technical support over the period. How much period here? 1 year they told. Clear? Are we able to understand? Right? Baker, test your understanding 9. You want a break? 5 minutes? Okay, take a break. We'll come back at 11. Yeah, completed. Baker. Complete பண்ணியா 11 o'clock வரைக்கும் தானே டைம் கொடுத்தேன் 10 நிமிஷம் மேல ஆயிடுச்சுல நான் வரலன்னா பண்ண மாட்டேங்க So what is this question about? Consideration. Then obviously see when so many points are there, this will be easily for more than 7 marks, 7 or 8 marks, right? So a comprehensive answer is required for this. Straightforward. What do you mean by straightforward?
The answer is the bonus is
Ah,
that's not to be considered.
ah,
And the cost of the contract is measured based on the completion based on cost number. So 1 million is 1.2 million is 67% of the work is completed. And 67% of the 2 million is the revenue should be recognized and the cost is million. The rest is the profit.
That's all. Always here now. 2 million plus a bonus of 0.4 if the building is completed. So how much according to you should be recognized? Huh? On what basis 67%?
Cost incurred, the total cost of the considered.
Ah. Hmm. So this is what basically one is variable consideration. Okay. But tell me, will it be so very simple? Well, all the questions will be like this only. How should the company account for this transaction? That is how they will ask. What else they will ask? But so much information is given is first thing. Second thing, reading the question properly is also important. This is what a specialized building into a contract with the customer to construct a specialized building. This will come in what? Over a time. So over time means a specialized building means when should the revenue be recognized? As and when? So performance obligation is met over a time or at a time? Over the time. Read. This is a specialized building. Only after the completion the control is transferred. So can I recognize the revenue at 31st December?
Baker says method progress towards completion based on cost.
That is, Baker can decide. What is your IFRS 15 telling? Works contract. This is works contract only, but let me tell you that has lost the significance. Very simple, because earlier cost was also dependent upon the progress. Now cost is not dependent upon the progress. Cost you are taking on the actual basis. Whatever cost is incurred, that cost only you are taking. Revenue alone on the progress. So it has actually become little straightforward. But so here the calculation is not significant. How you put forth the answer is significant. They're using the word specialized building. This is a contract which takes some time to complete. So specialized contract means there is no alternative use. So if there is no alternative use, only when the asset is completed, I can recognize the revenue. Only when the asset is completed, the control is said to be transferred. That is the point which we saw here, right? Performance is not resulting in an asset with an alternative use. That means that will only be treated as performance obligation over time. So generic asset, if created, then can be considered as over time. If specialized or customized asset is created, then only at a time. What time? When the control is said to be transferred. Okay. Plus, this point I did not mention earlier. This both are same point. So in your book, they are told 1, 2, 3 only. They have combined this with this. Here I am showing it separately as 3A, 3B. Okay. You have a right to receive for performance completed to date. In that case also, you can say performance obligation over time. That means I'm constructing this asset. This asset will take 2 years, but in the contract it is mentioned whatever progress is there, for that I have a right to receive the payment. You have to connect the dots, right? Right to receive the payment you have here also. Okay. So what we are telling, you are constructing the asset, you don't have a right to receive the payment, and this asset has no use, alternative use. That means only when you deliver, you will get the payment. At that time, can I recognize the revenue? No. Only after delivery you can recognize the revenue. But now, if it is a generic asset, even though you don't have right to payment, you can still recognize. Why? Because if you are not going to take, I can sell it to someone else also. Right? Getting my point? Able to understand 2, 3 scenarios. Generic asset, whether right to payment is there or not, right to payment could be at the end only, but it is a generic asset. That means I can recognize the revenue over time. Because if not you, I can sell it to someone else. Right? Specialized asset, I cannot use it anywhere else. Only towards the end, because only when I deliver, you will honor the payment. Or only when I deliver, I have the right to payment. Okay. In that case, specialized asset only towards the end I will recognize. Okay. However, specialized asset I am creating as per the customer requirement. But what is the arrangement? That whatever is the work is getting progress, for that I will have the right to payment. In that case, even if it is a specialized asset, I can recognize revenue. So in this case, it is a specialized contract. However, if the contract is terminated by the customer, Baker can demand payment for the cost incurred to date plus a markup of 30%. That means what? Today, if the customer is not willing to honor, I do not want this asset, I have a right to payment. Whether I get or not is a different question. I will go to court, that's a different thing. But as per the contract, I have a right to payment. In which case, this asset is performance is obligation over time, even though it is a specialized asset. But because you have a right to payment, you can recognize the revenue. Understand? First, here the answer is starting negatively, telling that it is a specialized asset. So only at a point in time when the control is transferred. However, because you have a right to receive, you can recognize the revenue. Okay. So these have nothing to do with variable consideration. Variable consideration is second part. $2 million, the building is completed within 18 months. Cost to construct the building are 1.5 million. So what they are telling, 1 million has been incurred. That means 67% work has been done. You can recognize 1.33 million revenue and 0.67 and 1 million cost incurred to date. 0.5 million you can recognize profit. These points you have to explain. right? Control is, this is a single performance or multiple performance? Single performance obligation. Okay, so it is a single performance obligation, and the service is, it is a long-term contract, and it is a specialized asset having no alternative use. This having no alternative use is the word that is from the definition. So this you have to mention. Specialized is not from the definition. Specialized I have used for us to understand. But you have to say that this is an asset which does not have an alternative use. These words are important. With the AC, temperature yaar change करना. Written. This will take a lot of time for you to write. Right. So I have a friend in Delhi who also teaches ACCA. What he will do now, along with FR, he will take SBR. And he'll get the students to write SBR also, along with FR. FR in March, SBR in June. One set of training, one set of preparation. Early PM, APM. But is that possible? So some people say it is possible, some people say it is not. For some, it gets reflected, for some, it does not reflect. Ask cases, guys, not possible at all, Kamal, they will say.
Pressure complete with
doable illa. How is the system allowing it? Without completing skill level, how is one able to go to professional level papers? I know for some it happens, for some it does not happen. So how do you start this? Basically, you will talk about performance obligation should be recognized when the control is transferred. Okay, whether the product or service that you mentioned, and this is a single performance obligation. Okay, where the service is provided at a time because. Okay, so instead of writing this is a single performance obligation, then where a contract has no alternative use. Okay, in such case, this is service provided over a time and revenue can be recognized over a time based on the progress measured. However, in this scenario, this particular contract is resulting in a specialized building without any alternative use. Okay. However, because this fellow, who is this fellow? The supplier. Because Baker, based on the contract, because Baker can demand payment. Okay, because Baker has a right to receive the payment for performance completed to date. This is not a performance obligation at a time, but this can be assumed to be performance obligation over a time, and accordingly revenue can be recognized. Right? So how much revenue, how much pressure, how much progress is there that you can mention. Then accordingly for variable consideration also, what is the key word for variable consideration? Probability or expected probability, okay, or the chances of this getting achieved. So that point you will explain. Okay, so you can complete this at your end. Let us proceed further on this. Make sure that you cross-check the answers also. Not necessarily that it will be same, but the wordings, okay, will be important. And if any key point if you have missed, right, that is important. It will not necessarily be the same how you start, but I will always want to start with the context with what the standard says. Okay, fine. Now, then in some of the scenarios, basically, one important thing is your repurchase agreements. Okay, now in case of repurchase agreements, that means I'm selling the goods, but I have entered into a contract to buy these again. Okay, so one is a straightforward obligation that okay, I am selling this, but I will buy this in future. Okay, that means you have to deliver it and I have to take it. We call it as actually a forward contract. Okay, obligation to repurchase. Obligation to repurchase. That means the other person has an obligation to sell. Okay, this is one scenario. The other scenario is right to repurchase, right to buy, which is called as a call option. So this you will see in your AFM also in detail. Derivatives. Okay. Right to repurchase means call option. That means if I want, I will buy. I will buy again if I want. Why? It is a right. Then obligation to repurchase when the customer wants. So first scenario is to repurchase. That means both of us have a commitment. One to buy and the other one to sell. The second scenario is right to buy. That means it is a call option. When I want, I will buy. The third scenario is when the customer wants, he will sell it. In that case, I have an obligation to buy. So in this scenario, I have the right. In the second scenario, the other person has the right, which is put option. Now, you don't have to get confused with this. The outcome is same for all of this as to how the revenue should be recognized. So that means I'm selling these goods today. Tomorrow I will buy this. Whether it is a right or obligation, that doesn't matter. Ultimately, I am buying this back. So what they are telling, there are two scenarios for this. Okay. So I'm selling this for 100 rupees. Tomorrow I am buying it back at 120. You are giving me 100 today. Tomorrow I am giving you 120. Right? So this what the standard says is, in this case, the standard says, do not show this as a sale of goods to you today. Okay, I'm selling this for 100 today, but there is a repurchase agreement that I will buy it tomorrow for 120. In that case, you cannot recognize revenue. In that case, then what should I do? That means I cannot recognize the revenue. I cannot reduce it from inventory. So this point is also important. One point very important. Whenever we are telling that revenue should not be recognized, at that time we should also say that there is no impact on inventory also. This inventory point is also important. For example, that sale or return of goods, 48 goods you said we will sell, two can come back. In that case, you cannot reduce the inventory for the two. So whenever revenue is not recognized, that means inventory should also not be de-recognized. Able to understand? Because when we are selling, when we are recognizing the revenue, that means we are selling the goods. That means we are de-recognizing the inventory from the books, from the balance sheet, and you are bringing it to cost of goods sold. Right? So if I'm telling no, you cannot recognize the revenue, that means I should not de-recognize the inventory. That means I should not bring it to cost of goods sold. Okay. So what they're telling, you have entered into an agreement to sell this for 100 today and buy it for 120 tomorrow. That means this is effectively a loan transaction. Do not treat it as a sale transaction. Why? Because you are taking 100 today, tomorrow you are giving back 120. Same. That is what it is. That is the second point. So second scenario, I'm selling it for 100. That means you are paying me 100 today, and you are giving me the asset tomorrow. I'm paying you 80. That means repurchase is for 80. In which case it is a lease transaction. We'll account it for as if you have given the asset on lease. First case, it was a loan transaction. For second case, it is as if you have given the asset on lease. The other fellow is paying you the rent. So when you have sold the asset, the other fellow has given you 100 rupees. Okay. and when the other fellow is giving back the asset, you are paying him 80 only. Even though there is no EMI payment here. In a lease payment, what you have periodic payments, right? Here the periodic payments are not there. But effectively it is like instead of periodic payment, you are paying one lump sum. So today you gave me 100, tomorrow I am giving you 80. That means definitely the future value is less. Today I have received 100. Tomorrow you are giving me back only, I am paying you back only 80. That means this is more or less a lease transaction treated in accordance with IFRS 16. To understand. So in that case, you have to work out the how if they are asking like how okay. So if they are asking how it should be accounted for, if this is for 3 marks, you will just explain. But if it is for 7 marks or 8 marks, you will explain properly and will also give the calculation, lease calculation. Writing points are important. What are the writing points? Transfer will depend. Okay, so what is transfer? Whether the goods have actually been transferred or not. So it will depend upon the repurchase agreement, repurchase clause, and whether there is any economic incentive to exercise the right. Okay. Now, do these transactions happen? These transactions are happening. That is why this has been brought into this. Earlier, in the earlier revenue recognition standard, this was not there. But because these transactions are happening, people were showing it as a sale. This is effectively your sale and lease back, whatever you have studied in your IFRS 16. Okay. Then the next one is, again, this generally happens. Basically, contract modification. Okay. Now, what happens? Selling 100 units of goods. Okay, sold to be delivered 1 month after at certain price. Okay. Now, after some time, 10-15 days, or after like before the delivery is made, this fellow comes and says, I want another 50 units. Okay. So because I'm buying additional 50 units, I want some discount. Totally, I've bought 150 units. Let's say earlier 100 sold for 100 rupees. 10,000 is the bill. Now 50 sold for, let's say, 80 rupees. So how much? 4,000, right? So 50 for 100 is 5,000, but 50 for 80 is 4,000. That means you have got what? 1,000 rupees discount. Now this 1,000 rupees discount is because of what? Is on this 40 or on 140? He's giving you, earlier he did not give you discount, but now you are telling, see, I'm buying so many additional units. Already 100 units I purchased, now I'm buying more. Why don't you consider? So what is he considering? The entire transaction, 140 or 150, sorry. 150 units is being considered while giving the discount, even though this discount is in the subsequent bill only. Able to understand? So that means now this is a contract modification and allocation concept will also come in. That means this discount of 1,000 has to be split proportionately between that 100 and this 40 and this 50. Able to understand? This is one result of contract modification. Okay. So now is it treated separate? It is not treated separate. Oh, there are two things: contract modifications. That means this existing, this additional order Should it be treated separately? Is the point. This 50 units additionally which is ordered, should it be treated separately or should it be treated part of the original contract? Is the point. So should we treat it separately or should it be part of the original contract? Getting my point? So original contract was to supply laptop. Okay. And then this fellow comes, no, I want one mouse also, this one camera also, this 3-4 items additionally, which I am selling separately also. Okay. So in that case, the second order, camera, other accessories. Okay. So this should be treated separate or should it be same? Separate. Why? On what basis we are telling? He is telling when you are delivering the laptop, deliver this also. To understand, simple. These are simple transactions, right? So now, what is the fight here? Why are we talking about what is the impact if it is separate and if it is not separate? It is more of allocation, that discount or price allocation or the period when you are recognizing for all of that. So because these can be sold separately, because these are distinct goods and services, these are separate transaction. These are separate transaction and you are going to charge for them. So this contract will be treated separately if the scope increases due to different goods and services and price also increases. That means even though yes, same customer, delivery is same, the contracts are two different contracts. Why? Because price is increasing accordingly and scope is also increasing. Scope is increasing, price is not increasing. Because I never pay for mouse. Whenever I buy laptops for my office use or for anything, I have never paid till date. I have never paid for mouse to anyone. Somehow I'll get this mouse for free. So for him, the scope increases, but price I will never pay. Even though this is what 300, 400 rupees. Say I'm buying laptop from you. I'm buying 10 systems from you per year. Why should I pay for mouse? He'll say, okay, wired mouse program. Wired I want this wireless. So now what is happening? Scope is increasing. Why? It is a separate good which I can sell separately also for a proper price. But in this case, price is not increasing. For same price I'm giving, in which case this is part of the laptop that is sold. ACCA course we are doing. Financial modeling is part of ACCA course. Sridhar will tell. So is this a distinct good and services? Yes. But is the price increasing for the same? No, because it is already increased. So is the price increasing for the same? No. So then is this a separate contract or same contract? Same contract. Okay. Now going back to the previous example, where 100 goods already ordered and 50 goods additionally ordered, not treated separately. Why? Because instead of 100, you are now doing 150. No distinct goods and services are sold. Same goods. Volume is increasing. Able to understand? These points we should be able to write. What will happen? Now let's say if it is same contract. So in this case, this discount which has to be allocated. This 1000 rupees has to be allocated between what? That 100 units and the 50 units. Right? So this is a cumulative adjustment. Cumulative catch-up adjustment. Because you have recognized now when this will have an impact is when these two transactions are overlapping between two accounting periods. When it is same accounting period, when it is same reporting period, then there is no problem. Okay, generally all these transactions this which takes place on March or on December are headache transactions because something will happen in next month. Then you have to combine both of these, right? So what will happen? 100 units sold in December, 50 units sold in January. But for 50 units, you've got discount in January. So this 100 units revenue has come in the previous year. The 50 units revenue is coming in the subsequent year. But the 1000 discount belongs to 100 units. Why? Because this is not a separate contract. So what you will show is you will not show that 1000 as a discount in the subsequent period. You will show as an adjustment to revenue of the previous year. So in the notes to accounts, you will have to mention the breakup as to how much of the revenue of the current year is a catch up of the previous year. You're seeing the impact. Why this is important? This is important because when people are looking at revenue in the P&L, it is revenue for the year. But in the notes to accounts, you'll say revenue for the year includes so much of revenue done as a catch-up adjustment belonging to the previous year. That means I will assume that next year this revenue will not come. This is a one-off transaction. But if it is happening every year, then it's a different thing. But in the notes, if it is specifically mentioned, there is one-time adjustment like this. Then I will be careful that when I am doing forecasting, when I am preparing financial models, when I am doing evaluation exercise, I will adjust this revenue. That is the significance of this contract modification. To understand you have to first try to understand why this breakup and all is given. What is the reason? What is this contract modification? Right? For the cumulative adjustment. So if it is treated separately, there is no cumulative adjustment. That means those 100 units are separate, the 50 units are separate, fine. So let's say in the same scenario, 100 units sold for 100 rupees. Okay. Now in the subsequent one, price has come down. Price in the market has come down. I'm going and ordering additional 50 units. Right? Subsequent month, the retail, the list price itself is 80 only. In that case, it is a separate contract. I don't have to do a catch-up adjustment. Able to understand? So these points I will have to write. More than the adjustment, these points I will have to write. Okay. This 13. Just your understanding 13. Salty. First, you tell the calculation, how much should be recognized by the reporting date. So I think the same scenario which we just discussed, this 100 units and this 50 units. How much part A? Part A how much? 900. Reporting date. Hmm. என்னப்பா? Scope and
the price
are increasing, changing. So,
is considerably
but is there any distinct goods and services? Same goods only, right? Then not a separate contract. So for not a separate contract, what they are telling, existing contract terminated and new created. Okay, and no distinct goods and services. But existing contract terminated and new created, modified. Okay. It is modified to require an additional 200. That means existing contract has been terminated and new has been created. Can we say? Okay, assuming it is not treated separately, in that case, what will happen? Let's take a stand. Okay, assuming it is not a separate contract, this 200 units is not a separate contract. In that case, how much revenue should I recognize by the reporting date? 900 products have been transferred, right? 700.
760. Then approximately the position. 360 to the remaining forms.
If it is not treated separate, then you have to do a cumulative catch-up adjustment. That means, what is the total price now? 1000 into 60 and 200 into 57, which is how much? 71,400, whatever it is, divided by 1,200. Right? So 71,400 divided by 1,200 is how much? 59. Huh? 59.5. 71,200. Okay. 59.5 becomes the price. So 900 into 51.5. If we are assuming it is not a separate contract. Okay. However, what they are telling here is this 57 is a standalone selling price. That means at that time the price of the product itself is 57. Right? Like the scenario which we said, like price itself has come down. The list price has come down to 57. That means this becomes a separate thing. That means you are not given a discount because of that 1,000 units. Have you been given discount because of that 1,000 units? No. The list price itself has come down from 60 to 57. Right? In that case, what should be the outcome? No. And in the second scenario, what they are telling, additional 40 for the additional 200 products. That means there is a discount given because of the existing. So the second scenario is more closely related to the first contract. Why? Because you are giving that huge discount. Because initially I ordered 1,000 and now 200 more. So for this 200, you will not get so much of discount. Roughly how much? 40% discount you are getting. Roughly. You will not get 40% discount for 200 units. Right? This is for 1,200. So the second scenario is more close to not being treated separately and doing a cumulative adjustment. First scenario, I think, is what? Separate. Treat it separately. That 1,000 you will treat separately. This 200 you will treat separately. Because they are telling 57 is the standalone price. To understand, the second scenario is where you are getting more discount because of the overall order. So a cumulative catch-up adjustment will be required. Okay, allocating the discount for the entire thing. But in the first scenario, there is no cumulative catch-up adjustment. This 1,000 will be treated separately, and this 200 should be treated separately. Answer. What are they telling? Yes, yes.
The contract modification are only for a specific contract because the product is the price will reflect the product standard. You only make 100 or 900 products under the original contract. Revenue of 54,000 should be recognized.
That is 900 at the original price, 16.
Go to the next part. The contract price increase does not reflect the standard selling price. The modification is not accounted for as a separate contract. Because the goods are distinct, it should be accounted for as new as a termination of the existing contract and the creation of new contract. By the contract modification, 700 goods had been transferred to the revenue of 42,000. 760 has been recognized on this. Now that the original contract is deemed to be cancelled, a transaction price will be determined for the new contract. This is the unrecognized consideration from the original contract. 360 plus additional consideration promised in the modification of 240, total of 26,000. This amounts to the price for product of $52. After the modification of more than 200 products in transfer to the street, revenue of $10,400 will be recognized on this. The total revenue recognized in this year is $52,400.
The breakup of that 52,400.
$42 is $10,400.
So basically 40 into 200, right? Which is how much? 8,000. And 1,000 into 60. No. 1,000 into 60, 60,000. Right? Plus 8,000. Right? So 68,000. 68,000 divided by 1,200 is how much? $56.7. That means you have sold per unit for 56.7. Okay, into 900. 51,000. So can we do like this? Can we take a weighted average like 1,000 into 60 you have sold plus 200 into 40, right? Can I do a weighted average? 1,000 into 60, 60,000. 200 into 40, 8,000. So 68,000. Total number of units is 1,200. So price per unit is whatever you have arrived at. Okay, and how much I've sold? 900. So so what will happen now? Basically, very simple. How do I identify? If this is not happening, right, then this will happen. That is how we read it. That means it is treated separately if scope increases and price increases for the same. So in this case, it is not treated separately. Why? Because they are not distinct goods and services. Okay, the second part. First part is this. Okay, second part B, where they're telling you're selling for 40, because you're not treating it separately. Why not treating separately? Because that 40 is because selling price is 57, but you are giving it for 40. That is why it is not treated separately. Right now, if it is not treated separately, then what happens? The existing contract is terminated and new one is created. Now, if I have to terminate existing contract, that 700 I've already transferred. So 700 at what rate are we recognizing? 60. So this 42,000 you can make a note separately. Then what? 200 at 40 and 300 at 60. So 300 into 60, 18,000 and this 8,000. 26,000 upon 500. So 26,000 upon 500 is how much? 52. So 52 into 200 I have to recognize. So I've already recognized how much? 700 into 60. 42,000 plus this 10,000 I have to recognize. Are you able to understand? This terminating the existing contract point is important. And basically very simple. If this does not happen, that means this will happen. Not treated separately. Existing the termination of the existing contract and creation of new contract. If the remaining goods are distinct from those transferred before the modification. Okay, part of the original contract if the remaining goods and services are not distinct from those transferred. So here one point I have not added. Basically, in this case, these are distinct goods or not distinct goods. These are distinct goods. You are able to identify. Even though not treated separately, you are able to identify one remote, second remote. This is a distinct good, that is a distinct good. But if it is, let's say, 2 floors I wanted to construct. Now I am doing some modification within these 2 floors. Instead of 1 room, 2 more rooms. or changing the layout a little. That means what? This is same contract only. This is not distinct goods or service. This is same goods or service. Able to understand? So that difference. So that point, page number 75, they are differentiating it. Okay, this termination point is important. Very simple. If there is unlikely relationship with the previous transaction, which is your first scenario, where price is 57, standalone price is also 57, and the price given to you is also 57. That means there is no relationship between the previous order and the current order. In that case, these are separate transactions, you can account for separately. But if the price is decreasing, if there is a discount component, then you can connect it together, as simple as that. So make a note. In fact, in your book itself, you can make a note, okay, that if the previous order and the new order do not appear to be connected because of the price, then treated separately. You can refer to this example also. The previous order and the new additional order are not connected generally with reference to price. So in this scenario, basically 57 was the price only, so you are also charged 57. Then they are treated separately. But if the previous order and the new order are connected, then they are not treated separately. That means that catch-up adjustment has to be done. So different scenarios we have discussed. I will share this Excel, okay, notes, but main is how you are able to draft the points for different scenarios. Okay, and basically some of the points I have not discussed, you can go through this, like financing, significant financing component. So that and all, I think you are very much comfortable, so you can go through this. What I will want you to do today at your end is give the answer for this by evening today. We'll send a Word document. Make a note of it. The question, discuss the criteria that must be met for a contract with a customer to fall within the scope. Okay, then once the contract has been identified as falling within the scope of IFRS 15, what is the criteria leading to revenue recognition? Understood the questions? What is the answer? What is the answer? You can explain it later, but at a high level, if you have to answer me, if this was a 2-mark question. Contract. So different points of contract. That is the first thing. That means the contract should be identifiable, payment terms should be identified, commercial substance should be there. Okay, there are two parties. So that those points you have to explain. Once yes, this is a contract, then how do I go about revenue recognition? Then this your 5 steps. Means entire syllabus you have to explain here. Okay, all the points connecting one with the other. You should be do not simply combine the points that are given in the book. Right? Definitely you can refer the book, but how you are able to integrate with an answer, that is important. Okay. Additionally, what I will want you to do is, so if there is a point which talks about significant financing, give an example. If there is a point talking about repurchase agreement, give an example, one liner. Okay, you should tell about everything. Over a time means what, at a time means what, example for each of this, whether the example whatever I have discussed, or you can take it from the book, which is okay. Whichever example you can understand, whichever example you feel is comprehensive, give reference. That will be a note. Basically, essentially, you are preparing a note for this chapter today. Once you have this proper answer, you can refer this for your preparation always. Okay, so I will want this by evening. What time? என்னம்மா ஈவினிங் தான் சொல்றேன், ஆஃப்டர்நூன் சொல்லல. 6 o'clock. 8 is evening, இல்ல night. Okay, send it by 8 o'clock. And tomorrow, because you already know non-current assets and all, you know already, right? So we'll go through IS 16 and all non-current assets, right? In similar fashion tomorrow. Okay, so do not study non-current assets, okay? Because you already know it. Good. Any doubts? Clear? Easy, Erika? Easy, Erika? Very good. All right, we'll catch up tomorrow, same day. Thank you. Hey, there is an activity.